Pass your life and health insurance exam, full live class. Question 1. Which of the following is not a required element of a legal contract? Offer and acceptance, consideration, competent parties, written signatures from both parties on every page. The elements of a contract are offer and acceptance, consideration, competent parties, and legal purpose. Question 2. What does consideration mean in an insurance contract? The insurer's promise to pay and the insured's premium payment and statements. Being polite to the agent. Thinking carefully before buying. The delivery of the policy. Consideration is the exchange of value. The applicant gives premium and application data. The insurer gives the promise to pay. Question 3. Which life insurance policy provides pure death protection with no cash value? Whole life, universal life, term life, variable life. Term life insurance is pure protection for a specified period and does not build cash value. Question 4. At what point must insurable interest exist in life insurance? At the time of death, at the time of application, throughout the life of the policy, only when naming a beneficiary. Insurable interest must exist when the policy is applied for, but not necessarily at the time of death. Question 5. What is the standard grace period for an individual life insurance policy? 10 days, 30 or 31 days, 60 days, 90 days. Most states require a 30 or 31-day grace period for individual life insurance policies. Question 6. Which rider waives the premium if the insured becomes totally disabled? Accidental death benefit, waiver of premium, guaranteed insurability, payer benefit. The waiver of premium rider prevents the policy from lapsing if the insured becomes totally and permanently disabled. Question 7. What type of policy allows the policy owner to adjust the premium, face amount, and cash value? Term life, whole life, universal life, decreasing term. Universal life is known for its flexible premiums and adjustable face amount. Question 8. Which settlement option pays a specific amount until the funds are exhausted? Fixed period, fixed amount, life income, interest only. The fixed amount option pays out a set dollar amount periodically until the principal and interest are depleted. Question 9. What happens if an insured misstates their age on a life insurance application? The policy is voided. The death benefit is adjusted to what the premium would have purchased at the correct age. The beneficiary receives nothing. The premium is refunded. The misstatement of age provision allows the insurer to adjust the benefit, rather than canceling the policy. Question 10. Who has the right to change the beneficiary in a life insurance policy? The insured, the beneficiary, the policy owner, the insurance agent. The policy owner controls the policy, including the right to name and change beneficiaries, if revocable. Question 11. What is the free look period? The time an underwriter takes to review the application. A period, usually 10 to 30 days, where the policy owner can return the policy for a full refund. The time before the policy goes into effect. The time a beneficiary has to claim the death benefit. The free look period allows the buyer to review the policy and return it for a full premium refund if dissatisfied. Question 12. What does the incontestability clause do? Prevents the insurer from denying a claim due to misstatements after the policy has been in force for a certain period, usually 2 years. Allows the insured to stop paying premiums. Prevents the beneficiary from contesting the will. Allows the insurer to cancel the policy at any time. After 2 years, the insurer cannot void the policy for material misrepresentations on the application. Question 13. Which type of health insurance covers catastrophic medical expenses and has a deductible? Basic medical, major medical, hospital indemnity, accidental death. Major medical insurance is designed to cover large, catastrophic expenses and typically features deductibles and coinsurance. Question 14. What does the coordination of benefits provision prevent? Overinsurance and double payment when a person is covered by more than one plan. The insured from seeing multiple doctors. The insurer from paying claims. Premiums from increasing. It ensures that multiple insurance companies don't pay more than 100% of the medical expenses combined. Question 15. In health insurance, what is a copayment? A percentage of the total bill. A specific dollar amount paid at the time of service. The amount paid before the insurer pays anything. The maximum out-of-pocket cost. A copayment is a flat dollar amount the insured pays for a specific service, like a doctor's visit. Question 16. Which characteristic applies to a non-cancelable health insurance policy? The insurer can raise premiums based on age. The insurer cannot cancel the policy and cannot raise the premiums. The policy is only valid for 1 year. The insured can never cancel the policy. Non-cancelable policies guarantee the policy's continuation and lock in the premium rate. Question 17. What is the purpose of Medicare Part A? Outpatient care, prescription drugs, hospital insurance, dental care. Medicare Part A covers inpatient hospital care, skilled nursing facilities, and hospice care. Question 18. Who qualifies for Medicaid? Individuals age 65 and older. Individuals with low income and limited resources. Only people with disabilities. Anyone who applies. Medicaid is a state and federally funded program for individuals and families with low income. Question 19. What is a typical elimination period in a long-term disability policy? 1 day, 7 days, 30 to 90 days or more, 10 years. Long-term disability policies usually have longer elimination, waiting, periods before benefits begin. Question 20. What happens during the accumulation phase of an annuity? Funds are paid out to the annuitant. The annuitant dies. Premiums are paid in and interest grows tax-deferred. Taxes are paid on the principal. The accumulation period is when the annuity is being funded and the money is growing on a tax-deferred basis.